Thank you and good afternoon, and pleased to be able to present the story of Savanah Resources and how it might be a solution to one of the problems that Gerard just mentioned there, in that Europe consumes about a quarter of the world's lithium supply, but only generates about 3% of it. So we're doing our best to redress that balance. So our executive team at Savanah Resources is headed up by David Archer, our Chief Executive Officer. He's been in the industry for what feels like forever, and over the course of his career he's taken a couple of micro-cap natural resources companies from almost zero to 200 million and 400 million Australian dollars in market capitalisation, and his current aim is to do that on the AIM Stock Exchange with Savanah Resources, and pleased to report that we're well on the way for David achieving that ambition. Myself and the CFO have been with the company since its inception in 2010. The most new member of our team is Martin Steinbild. He's an ex-Albemarle executive, Albemarle being one of the largest lithium producers in the world, and he joined our team in January this year. His role is to interface with all of the people within the lithium value chain. Dale Ferguson, who's our technical director, he's very energetic and a very commercially minded geologist, and he, in conjunction with David Archer, were responsible for commissioning the 2.5 million tonne per annum copper mine in Kanmantoo in Australia. So our project. So what we've got at the moment is the largest discovery in Western Europe of a spodumene lithium deposit. We discovered that in the last 12 months, and the announcement came out in about April of this year to confirm that we've got so far 14 million tonnes at 1.1% grade lithium, which is kind of in the same ballpark grade range as all of the Australian hard rock producers. We see this as the opportunity to be really the first significant lithium producer in Europe, and based on what we've got in our scoping study findings, then we would have enough material for 500,000 electric vehicle equivalents of lithium per annum. And at the moment, the reason our Chief Executive, David Archer, is not here is because he's presenting to the European Commission today in conjunction with the Portuguese Secretary of State, where they're really explaining how significant Portugal could be in providing the lithium minerals for the EV industry. Yeah. Portugal being in Western Europe comes with low political risk, which is a nice thing for the projects, but what it also comes with is a very low-cost labour environment because of the economic problems they've had in the past. Gerard talked a lot about growing markets, so I think we're in the right place at the right time for supplying lithium into Europe. And our board of directors have invested 7.2 million cash over the past few years, and that includes David putting $1 million in himself. So no need after Gerard's presentation to talk about the demand for electric vehicles, but what I would like to point out is the importance of our project being in Europe, because China probably controls now about 75% of the world's global lithium supply. Australia, all of their production is controlled by China, and they just became the largest producer of lithium minerals in the world. So for us, being in Europe, where there's a big market for lithium and where the European commissioners are very keen on implementing a very similar process like the Airbus project for aeroplanes about 30 years ago. They wish to create a European lithium value chain. And the mineral that we've got is spodumene, so not every lithium project is the same. There are many kinds of spodumene minerals, some of which require new kind of sciences or special chemical plants in order to process them that would be designed specifically for that ore body. What we've got is very common garden bog standard spodumene. It's the internationally traded and recognised mineral of choice, and it's what all of the Australian hard rock producers have. So our project is in the north of Portugal, and this area here is where we have a granted mining lease. We acquired that last year, and at the time when we announced it, we got a lot of strange looks from the investment community because we'd acquired a mining lease which didn't actually have any resources on it. The reason for that was it was licensed by a ceramics company in the past for feldspar and quartz. Lithium is also included under the terms of that license, but they weren't looking specifically for lithium, although they did some testing for it, and that's why we were able to pick this up. And so we've taken it from no resource to 14 million tonnes of resource in 12 months. You can see from these yellow lines, that's the road network, and kindly the European Union funded a very, very good network of highways in that part of Portugal over the last 20 years. So our mine site there is pretty close to the major highway, which runs down about 150 kilometres to the bulk handling export port, which is just north of Porto. We own 75% of the project, and we paid 4 million Aussie dollars so far, and 40 million shares, and we expect to trigger a final milestone payment when we announce a resource of over 15 million tonnes in the relatively near future, I would expect, based on the success of the drilling results. And we've been drilling constantly at this location since July of last year, and we intend to continue drilling for the foreseeable future until we stop finding stuff. So we announced the results of our scoping study a couple of weeks ago. We think that the financial outcomes of the scoping study are exceptional as far as mining projects go, particularly, and just general business projects as well. So the scoping study was done by Hatch as the lead consultants, the major engineering group, who've had plenty of experience of doing these studies for the Australian hard rock producers. The life of mine we expect at the moment to be around 11 years with a throughput of 1.3 million tonnes per annum. But as we continue to discover more during the course of the year and move towards feasibility study, we would expect to probably be able to increase the throughput per year and also extend the life of mine. The study was done at a spodumene price of $685 a tonne, which is in line with all of our peer groups who put out their studies in recent months, and it's considered a very conservative pricing deck. The current price of spodumene appears to be around $900 spot per tonne, and Pilgrim Minerals recently were quoted as saying that they'd sold some to China for $1,300 a tonne, including some VAT. So net looks like it was over $1,000 a tonne. The capex is around $110 million, which on a like-for-like basis is very comparable with the Australian peer group, but ours includes a couple of optional extras, and one of those is a feldspar and quartz recovery circuit, because the ceramics industry in Portugal and Spain is very vibrant, and we will be able to sell that as a very valuable co-product. And also, in order to be able to dry stack the tailings, then we've got a filter press included in that as well. The financial outcomes, with the net present value before tax of $356 million, and then after tax of around $280 million. It's very nice, but most pleasing feature, I think, of the project for us is the internal rate of return before tax is 63%, and after tax is almost 50%, with a payback of 1.7 years before tax and just over 2 years after tax. Then, in terms of cash costs, over the life of mine, we're looking at about $275 a tonne. But in the first 4 years, we benefit from an extremely low strip ratio. So the mining costs are significantly lower, so $210 per tonne, which puts us very far to the left-hand side of the cost curve. And given the robustness of this, we don't intend to do a pre-feasibility study. We intend to go straight to bankable feasibility study. This is an overview of the mining lease area, and the majority of the drilling has been focused on GRANDAO, but each of these red outlines are where there's pegmatites outcropping at surface, and we've only really done Noah Reservatorio and GRANDAO to date, and are beginning to look at some of the others. And so far we've been able to find that when we're drilling, particularly at GRANDAO, the deposit is very well behaving, very consistent, and just keeps growing in 3 of the 4 directions it can grow in. This is an aerial view of GRANDAO deposit, and we have a very unusual problem in the fact that this is a electricity pylon line, so we're going to have to actually move it a little bit because it sits right on top of the deposit, but highlights just the general good infrastructure of the project quite nicely. And this is all of the drill holes and the drill pads, so you can see there's been a significant amount of activity there in recent months. This is a geological view of the resource at GRANDAO, and at GRANDAO, as we reported there, the longest interception of spodumene mineralization in Europe, just over 100 meters at 1.05%. And this is a cross-section of the GRANDAO ore body, and what you can really see at the top there is that the initial few years we are mining from or at surface, and hence the really low strip ratio. So over the first 4 years, the average strip ratio is 1.6 to 1. And what we expect to be able to do by drilling and discovering more deposits in this area, that we will be able to replace some of this stage 2 pits with closer to surface deposits, and this will get moved further back in the mine schedule. An aerial view of what the project layout will look like, and the majority of the activity will be at GRANDAO in the first 4 years. And just to kind of remind everybody, we are investing about $50 million in the capex so we can dry stack the material rather than have a tailings dam. This is a table of our mineral resource estimates, and at the moment we've got 40 million tonnes at 1%, and we kind of have an exploration target purely on these three targets alone of 8 to 10 million tonnes extra. So once we start getting into the pegmatites we've not drilled yet, we expect that that should naturally increase. This is our timeline to production. It's a very aggressive timeline. One thing we can point to is that everything we've said we would do so far, we have done. We've delivered 3 resource upgrades in 1 year and also a scoping study. The people we intend to appoint for the feasibility study will be a turnkey operator who has done a feasibility or several feasibility studies on very similar projects recently, and all going to according to plan, then we would be in production by the start of 2020. This is just an example of Altura in Australia, and we consider we're kind of very similar to, our story is very similar to theirs. They started off with an economic study on a resource similar to ours, continue to work through their economic studies whilst drilling and finding more and adding more to their mining inventory, and they're now they're just in construction and they're subject to a takeover bid from their offtake partner. Just very quick peer comparison to give people who are not very familiar with lithium, like the kind of market capitalizations lithium companies can get to. So Pilbara Minerals being the most significant one, and almost £1 billion market capitalization. And then for Savanah, there are not many AIM listed lithium stocks, and certainly we're the only AIM-listed lithium stock which is open pittable, which has got spodumene, and which is, has a mining license and is also close to good infrastructure. You'll see there in terms of cash costs where we compare favourably to many of these and very favourably for the first 4 years. So that's our project in summary, and we look forward to moving it forward very fast. So thank you.
Thank you.